These are my friends from the Origin Groups. It's how to leverage your R&D tax credit in pain management and in the integrated space. So today I have Dale, Charles, and Joshua. So they're going to be sharing some information. So without further ado, Dale, would you like to take over and do introductions here?
Absolutely, absolutely. So my name is Dale Orr. I've been working with Origins for the past several years. Charles and Josh are the senior partners of Origins Group, and they actually reached out to me. They found me. I've been a sales guy my whole life. That's what I do, and they found me, and it's been a match made in heaven, and things have just going really well. I've been very pleased with how they work, and I've been very excited to introduce my clients to them as well. So when I met Natasha, it was just this serendipity that we met, that it's all working out well, and you'll be excited as you go through. So let me go ahead and jump in today. The question that I always start with is this going to be worth my time today? That's the question that you have anytime you walk into one of these. Is this going to be really worth my time? And I want you to know that we recognize that although this is a free webinar, you're still paying for the information. How? Well, you're not seeing patients. You're not making calls. You're not doing the dozens of things that you normally do during any given day. You're paying with your time, and we take that very seriously. So to answer that vital question, will this be worth it? Absolutely, it will be. So I've had hundreds of conversations with business owners just like you, and I found that year after year, these same owners are simply being told what size check they need to write out to Uncle Sam. But what they're not being told are the steps that they can take to offset those taxes, or better yet, how to get Uncle Sam to actually write them a check. So let me ask you this. When was the last time you were given bona fide ways to significantly lower your tax bill? It's not meant to be a knock against any particular advisor. It's just a fact. Most are never asked that question. So answer these questions for yourself. Do you want to expand your business? Do you want to add new revenue streams, update and improve your processes, improve your outcomes, develop new products or processes? Yes, that's always the answer I get. But the obstacle to those outcomes is always the same: capital. You need money to do it, and someday you'll be able to take those steps. Maybe next year, right? The power of R&D, the power of the research and development tax credits, is that it's the tool that can find the money, find the capital that you need to take those steps. You qualifying for the R&D could be the game changer you're looking for, the break you've been waiting for. All it takes is a phone call to get started, and I can guarantee you this 15-minute call is going to do a whole lot more than save you a little bit of money on your car insurance. So let me go ahead and give you a very quick story, one of my favorites. I'm known for my storytelling. So let me give you a quick one. A little guy walks into a lumberjack camp. He goes up to the foreman and he says, "I'm here to apply for a job." The foreman looks at him. He says, "Dude, you're so tiny. I only hire monsters here." He said, "I'm the best lumberjack you've ever seen." He said, "In fact, I'll challenge your champion to a contest." And he said, "If I win, you have to hire me." He says, "Well, what happens when you lose?" He said, "Nothing." He said, "You got some trees cut for free. There's no lose for you." He said, "Fair enough." So he calls in his champion. Big guy, about 6'4", carries a giant axe. He said, "This is my champion." Little guy says, "Bring him on." So the foreman goes over and measures out a group of trees for the champion, measures out a group of trees for the challengers. He says, "Go." And the axes start swinging and the chips start flying. After about an hour, the little guy walks off, takes a little break, comes back. Big guy keeps chopping. Hour number 2, little guy takes a break, steps out for a little bit. Big guy keeps chopping. At the end of the day, the foreman yells, "Stop," and he starts to count up the trees that were cut. He goes up to his champion. He starts counting. "Oh my gosh, fantastic. I knew you'd do great." Then he turns to the stack cut by the challenger and he starts counting as well. And he stops and his mouth falls open. He said, "You won." He said, "How did you win?" He said, "You took a break every hour." Little guy looks up at him and says, "I wasn't taking a break. I was sharpening my axe." And that's what we're doing today, is we're sharpening your axe. We're giving you a new way, a better way to do things you've ever done. And this is going to be well worth your time. So thank you so much for your time. I'm going to turn you over to Charles Hawkins, CPA, again, one of the senior partners, he and Joshua Azaran, founders of Origins Group, and we're going to let them go through the rest. Thank you.
Thanks, Dale. So we're excited to talk to you about the R&D credit. First, I want to kind of talk about how this came about and kind of the genesis of it. So it started back in 1981, and it's been added on year after year after year by Congress, and it's one of the backbones of American industry. So most of the Fortune 500 companies actually, that you know of, that you hear of every day, are using the R&D credit. What a lot of people don't know is that it's actually useful for small businesses as well. As you can see here, that they've done several updates. One of the biggest ones that we really like is 2023. They increased the cap for small businesses where you can use it to offset payroll tax. And I'll get more into that later on. But what's mainly important is that this isn't something that raises any red flags or is something that's unusual. It's just something that a lot of people haven't been taking advantage of, and it's been around for a very, very long time. It's actually, we have a lot of confidence that it's going to be increased. A lot of the value of this and the amount of the credit is going to go up because now of what happened in the last election, because there already was a deal to do that before the election. They just held off on it. So now that the Congress is the way it is now, they're the ones that were driving the increase in the R&D credit. So we have a lot of hope going forward that this can even get better than it is today. What is the R&D credit? Basically what it is they give you a credit back to incentivize business owners like you to develop new products, new services for you to target, customer base. What they're trying to do out of this, it's not really out of the goodness of their heart. What they're trying to do is incubate small businesses so that you guys then become a bigger tax base later on down the line. So they are trying to do this to grow the economy so that future tax base is higher to increase revenue for the federal government. And they believe, this has shown, studies have shown that this has been working. It can provide financial benefits specifically for improving the techniques and protocols for pain management. This is a really good one for pain management because a lot of the stuff you guys are doing, it looks like the code was written exactly for you guys. There's also a state credit in most states. I think there's only 8 or 9 that don't have a reciprocal or a corresponding tax plan or tax credit that goes along with the federal credit. So almost every state, you're going to be able to maximize and amplify the power of this credit by simply doing the same work you're doing by giving us the information for the federal. It's the same information that we use to apply for the credit. We just have to do a separate calculation. So how do you determine the eligibility for the credit? They put out a 4-part test. And what it is you have to develop or improve a business product or service for sale by a customer. And what do we mean by that is, I'll give you an example of one that wouldn't apply. We have a few clients that do customized products or customized engines, to be specific. And so he developed a custom engine just for one client. That's not going to count because it's not like what he's learning or what he developed there, the end product can be sold to other people. That's not going to be the case for you guys. So I'll get into that in a second. You have to eliminate uncertainty. So it has to be some sort of uncertainty or an improvement in your process or product. You have to basically do a process of experimentation. So that means changing some of the variables, changing how you are implementing it, or how you basically apply the procedure. And it has to be technological in nature, but you guys check the box on that. So again, to go back, how pain management therapies and treatments qualify. What a lot of what we're hearing from a lot of the clinics that we work with, they basically are improving their processes. They're adding new treatments. All of these things are very, which leads into the next one, are very uncertain about how this works with the patients and how it works overall long term, and how can you improve it. And that leads into the process of experimentation. You're changing the options or changing the variables. How long do you do the treatment for? How long is the dosage or the voltage, or if you're doing neuropathy, the timing, all of these different variations, combination of treatments, I had one that qualified was they put together a whole treatment program, which includes nutrition and other things that you wouldn't even think, but they combine this all together and continue to tinker with this program. And that counts as experimentation, and that counts as R&D. And again, all of this is biology, so you guys check the box. Again, as an address, Josh and I have been doing this for a long time. We have between 60 and 70 clinics that we do work for, a lot of really, really large ones. Some of them are doing $40–50 million a year and having a really extensive accounting support team in kind of a negative way for us because they never want to approve anything. So we had to go through and work on this with them, and they understand, they're buying in, and they see that how our work then ties to what the IRS is saying. So this is when they see what you guys are doing in the biology area and with clinics and pain management, they know this is something that they don't audit very often or they go after very often because they understand this is what this credit was made for. Versus if you have somebody else in another industry, like construction's kind of tough. There's some of the other ones that are really tough to say, are you really developing anything there? Those are the ones that they look at. They understand what you guys do, and they understand the nature of a lot of these treatments. Some examples of what you guys may be doing these are really, really ones that we see an awful lot with the client list that we have. Platelet-rich plasma has been very big lately. Stem cell therapy, a lot of neuropathy. But basically what I want you to get out of this list is this isn't an inclusive list. This is just to get you guys into thinking about what sort of treatments do you do that are very similar to this, where key questions to ask. Is there uncertainty about the effect of this or how this is going to work and how this is going to improve the lives of my patients? Am I systematically testing and changing options? Things like the timing of it, duration, dosage, voltage, all of these different combinations. Am I doing things like that? Am I documenting it, seeing how the patient does, and then going back and tweaking what I do? If all of those questions are yes, then it's going to be a treatment that you guys can then get some money back from the government for things that you already are doing today. Okay, one of the great things, the biggest questions we get is, okay, how can this benefit me? You guys can go back up to 2021 now, depending on when you filed your 2021 income tax return for both state and federal. We definitely can go back right now all the way back to 21, and we can claim this credit for business expenses that you guys might have already incurred. Okay, and so in the first year, the credit can be up to 20% for every dollar you spend, 20 cents back for federal, and an additional up to 15% in certain states. Usually it's around 10 for state. So that is a huge amount of money that you can get back. Also, just going forward then in future years, usually what happens the very first year you claim it, there's a baseline, and then it decreases every year based on how much. But if you use a lot more, if you have a huge increase in R&D, then your credit will go up. But there is a baseline. So typically if you spent the same amount, it's going to go down year after year if you after the first year. But what we've seen is with most people that kind of stabilize their R&D spend between state and federal, you can expect around 20% or a little bit less than that combined between state and federal going year after year. So this is a gift that kind of keeps on giving. And obviously it increases the more you spend for R&D. So if you have a, kind of a left to right upward chart, that's going to be the most ideal, area where you're going to get the most benefit of it. And again, this is a dollar for dollar credit. So that means when you get the credit, say you spent $100,000, and we're just talking about federal here, and you get 20 cents back per dollar. You get 20 grand back. You can use that. You owe the IRS 50 grand. You're going to have to write a $50,000 check this year. You basically have to write a $30,000 check. It's that powerful. It's not just deductions. It's an actual credit. Okay. And then what we can do is, so say in 21, if you had a $50,000 credit, you would get a check back. If you paid taxes in 2021 of more than $50,000, you would get a check for $50,000 back from the government. So there's three mechanisms that you can use. You can either use it to offset future tax liability. You can get a cash refund if it's a prior year and you pay taxes like 23, 22, 21, or you can use it here for if you're a small business, you have less than 5 years and less than 5 million in revenue each year, you can use it to offset your Social Security and Medicare taxes. So that is a huge one that some of the newer clinics that start up can use and can take advantage of. If you have another business that you just start up, a lot of people that we're having, they have a new clinic, it's under a new EIN, you can do that there. Also, you can use these credits for up to 20 years. So if you're going through a rough patch right now, it's still worth it for us to file, because then you can save all of this up. And then whenever you do start paying tax, you can offset them with these credits. Why us? Okay, so I told you before, we have 60 to 70 clinics that we specifically in this pain management space that we work with right now. We have all the documentation. We work with the IRS. We work with great other groups. We have great partnership relationship with all of the best firms. And so we see, even though we haven't been through extensive audits, we only had a few questions come back from the IRS. We know what the IRS asks. We know what they approve. We know what they don't approve. So we have all of this bulletproof support for you. We know exactly what to do, and how to send it in to the IRS so that this doesn't raise any red flags, and that it's something that you'll have a very, very low audit risk because of our compliance strategy. And then also, we just have a really, really great roster of some of the best and most knowledgeable tax professionals in America that we work with on a whole host of things, which we'll get into in a little bit. What we do also, unlike any of the other firms, is we work with your current tax team. That's what our ideal situation. We've done emergencies where we can take over and do things for you if there's a problem there with your current, tax provider. But our ideal situation is for us to work with your team. And what we do, unlike anybody else, is most of these big credit firms or CPA firms that specialize in this, they calculate the credit, they send it to the IRS, and they wash their hands, or send it to your accountant, they wash their hands. But it can be complicated and not optimized if they don't know, if the CPA or your tax compliance team doesn't know how to use it. So we get on the phone with them. There's offsets, and sometimes that there's a lot of different other credits that you could be taking that can override. We help them figure out which is the most useful for you and the best way to limit your tax liability. And so we actually do that. And then also what we do is we work with a lot of people. One of my best friends started a software tracking system called Tax Now that basically pulls all the transcripts. So we're the best at monitoring this with the IRS. And then also, even beyond pulling transcripts and getting an automated view, we actually understand the whole mechanism for the best way to call the IRS. So not only do we do that, we make sure the IRS is processing this and we work it. If necessary, we go to the taxpayer advocate. If they're slow on this, we'll yell at the taxpayer advocate and they'll work on this, because we have such an extensive knowledge of credit. We know that sometimes the IRS can be slow on these, and we push every button we possibly can to get this paid fast. We also have a ton of other opportunities for tax planning and asset protection that we can do. Again, I want to stress the fact that of all of the different groups that we work with, everything comes across our table. So what we usually do is start with the R&D, but there's a whole host of other things that we can do for you. And I kind of want to pass over the call now to Josh Azaran, my other partner in this, and he can walk you through some of the other things that we can work on with you. Go ahead, Josh.
Absolutely. Thank you, Charles. So, as you can see on the slide, a lot of what we focus on is not just the R&D credit, but optimization of financial positions using things like these strategic tax solutions. So amongst the things that we can do within the advanced tax planning arena are strategic techniques that some accountants are familiar with, most are not, between the arenas of deferral and then potentially mitigation. Let me just define that very clearly. Deferral is we can get you additional time, push tax out to a future period, or in some cases, eliminate the taxability completely. So through a variety of planning techniques, we go ahead and develop comprehensive strategies with the clients on both the overall tax positioning, business structuring, investment planning and structuring, and then we'll go ahead and implement these types of deferral strategies and mitigation strategies. Throughout this entire process, as Charles was referencing, we are constantly doing due diligence. We are constantly looking to the optionality that the tax code gives us between paying taxes, investing, making charitable contributions, because we do have options there. And we go ahead and do the research and perform the due diligence on a variety of strategies. Between our teams of CPAs and the tax attorneys and financial planners we work with, we will go through and plan, structure, and implement these tools for you and for your practices to significantly reduce or at least defer your tax exposure. Along with the R&D and other types of tools, this allows you to grow your businesses and your personal financial positions very significantly and very quickly. Going in from there, Charles, if you want to just hop to the next slide, we also have a variety, because this all ties in together with that holistic approach, is advanced and specialty insurance and planning services. So all of the wonderful stuff, as I like to say, that you've probably heard on TikTok or Instagram or through ads, this exists. The difference is most companies and most planners are not sophisticated enough to integrate these into a complete overall wealth and accumulation planning strategy. So we teach you and we can explain how to use life insurance as a financial tool using strategies that I'm sure many of you have heard of, like infinite banking and be your own banker. Again, augment and create cash flow while preserving capital. We also have unique reduced cost services for insurance and other sort of planning tools. We can teach wealth accumulation through insurance and other planning types of vehicles. And then, of course, asset protection, reducing your liability exposure, legacy and estate planning, and then the retirement income planning strategies that go with it. Since we are a comprehensive firm and we have professionals licensed across a variety of different jurisdictions and covering these different areas, we are able to present integrated solutions to get you the best possible results. So I think from there, one of the things we could do probably if we have a couple of minutes is certainly open up to some questions that we're happy to answer. And then again, I think as Charles mentioned, you are welcome to work with Dale. He is our main point of contact on this, and he is an amazing resource to be able to help you get information about this. We are more than happy to have individualized and personalized calls and meetings with each and every one of you to take advantage of these types of credits if they apply, and then certainly expose you to all the other opportunities and optionality that exist. I would say versus any other firm that I've ever worked with or known, we probably have more resources and opportunity available. And therefore, we act as a good resource also to vet out different strategies, questions, and opportunities. So we'll go ahead and I think share Dale's information here. Again, he can help coordinate, answer any questions, and get you with the right people at the team to make sure that you guys are getting the absolutely best possible services to enhance your personal and business financial pictures.
Thank you, Josh. I did want to include one thing here that I wanted to make certain was perfectly clear. Success is not a required component of R&D. You don't have to be successful at the thing that you're trying to affect. And in fact, failure is actually an enhancement and a validation of your experimentation process. So if you've had things that you've done, oh, we tried that a couple of years ago, we did it for a couple of years, we ran into this, we ran into that, we scrapped it and we're moved into something else. Those are things that we need to know about as well.
Yeah, that's a great point, Dale. I think Charles touched on this a bit, but and we're certainly happy to expand on this topic. But overall, this is about experimentation. Just because you went ahead and tried something, a treatment protocol, a modality, a different use or a procedure or combination, and it didn't work out, that in and of itself is what this is about. I don't want to say it's rewarding you for your failures, but quite the opposite. It's giving you the opportunity to make those failures so you could have these great successes and improve positions for clients.
Awesome. Thank you guys so much. We do have a couple of questions, so we can go through a couple of those. I wanted to ask, though, because one of the things that came up was, hey, I was using Synexus. There's some clawbacks on it. Hey, I was doing regenerative medicine. There was clawbacks on it. And you guys said, oh no, that's all the more reason, like, we want to help you guys do this. So if you could explain that a little bit, and then I'll repeat.
Absolutely. It's basically that ties into, there's no better proof of that, of experimentation and those sort of informational tips that the IRS gets. All that does is prove that this was an experimental procedure. So that right there would almost eliminate the IRS from having any questions about the deductibility of it. So it's a negative for the person, for the clinic. I know that, and it's really negative. But what we can do is try to salvage that situation by helping you get some of your money back for taking that risk and developing that product, or spending it on developing that product. So again, what this does is, it's bad. 100% it's bad. It's negative for the clinic, but for the R&D purposes, it almost basically inoculates you from them saying that this isn't a treatment that qualifies for the R&D credit, if that makes sense. It is proof positive. So in that point, a lot of people, it's kind of counterintuitive, but no, what it does is that makes the R&D credit that much more, obvious.
That was the big thing for me, because, I talk with a lot of clients across the country, and they're like, oh my gosh, Tosh, I did this thing and now they're wanting the money back, and what do I do? And it was this new thing. So you talked about it covering the cost of the equipment, the cost of the labor, the cost of consulting or coaching on those particular things. So can you talk a little bit more about that?
Yeah. So basically what we do when we work with you and we start developing to calculate the credit, we need everything in 3 buckets. You have a bucket for wages, a bucket for what they call other qualified research expenses, and then you have a bucket for contractors. The reason why the IRS wants you to put them in those buckets is because those inputs are how they're calculated, how you actually calculate the credit. And we have a very advanced software that helps you do that also optimizes other tax credits. So you need those 3 inputs to actually do the calculation. And really what falls in those buckets, wages are going to be all of your paid staff that's actually on salary, that you pay FICA taxes for, they're real employees, like 100% treated as an employee. Then you have other QREs, which could be a lot of different things. Could be the cost of equipment, if you probably didn't purchase it, because most people, if you did purchase the equipment, you're going to be claiming the depreciation. There's really great, this just shows you that equipment is a great item for us to see how there's optionality and there's interplay between the 2 credits. You could have a huge double depreciation, or some of the other tools that you can, like makers, these other tools that you could use for depreciation that could maybe be better than the credit, and we would let you know that. However, if you lease the equipment, or you didn't take some of these really big depreciation items, then the equipment would count. It could be all the other things like training, other software you use to track all of your patients or use with it, or it could be consumables. It could be all of these different types of things that are there. Basically, if it's something that's critical to the function of the treatment, it's going to be most likely counted as other QREs. And then all the contractor expenses that you paid, so all your 1099s related to a specific therapy or treatment, that's going to count. So basically what we are going to do is align those in those 3 buckets, and then that's what we need to optimize the tax credit and calculate the tax credit.
Awesome. Thank you. Dr. Chris Gross, if you want to ask your question, go ahead and unmute yourself.
Mine was more about the wealth management. I've got a company. I use that, what the billionaires would do, live like a Rockefeller. I tried to get the IUL, the Universal Index Life. I have it, but I cannot get them to call me back because I wanted to use some of the money. Do you guys do some of that? I've called them several times. I've left them emails, and then they sent me a Merry Christmas.
We can absolutely have someone take a look at that on the team. So we have members of the team who are insurance licensed to specialize in that area, and we can certainly have them take a look at that for you, ensure that the plan was designed properly, and see how we could go ahead and improve and enhance that. And that's really, I think, sort of endemic of the reason, we got back into the R&D credits on a public basis. We had always done it for our clients for a couple of decades now at this point. But opened up really to the broader market just because we saw that overall the amount of follow-up, implementation, fulfillment, as yourself, and it sounds like how others have chosen to share across a variety of different areas, has not really been there. So no, we can absolutely help you see that through. And then part of what we do is we just, we'll end up acting as an ongoing advisor. As Charles mentioned, we're not here to switch your existing people. What's not broke, we're not in the mood to fix it. We have no reason to change any of your existing relationships. We're here to augment and improve and help. And yes, absolutely, if need be and there's a gap, we could either fulfill that in-house, or we're happy to introduce you to qualified professionals in respective areas for that.
Great, thank you, because now you see that I'm kind of bittered by it, because I had specifically told her that I don't want it set up that way. I want to be able to use the money against it if I buy more Airbnbs. I need the money out of that to put it back, and then I can pay it back slowly.
Yeah, we could certainly have a conversation offline. Dale is amazing.
I can assure you they're not answering it, because it takes out of their 1 year commission that they have there, because it's been, it's coming up on that. And I'm like, oh man, you make me so. Anyways,
we'll get those things handled. I mean, this is part of what we deal with, and part of what we've always dealt with is we've been a firm who takes complex situations, simplifies them for clients, and then basically fixes the situation. So no matter what it is, within reason, I'll say we'll find you some solutions for sure. Don't you could be relieved of that one at least. We'll get some solutions for you for sure.
Real quick question on the R&D. What does the R&D mean? Did I miss that?
Research and development.
Yeah.
Research and development. Okay.
Yeah, sometimes it's referred to as R&D, or sometimes it's called research and experimentation. So you'll see R&E sometimes. And effectively, the credit, as we were getting at, is a credit that's given for increasing research and experimentation. So, as Charles very clearly mentioned, it's not about continued success. It's about continuing to make attempts, improve processes, procedures, develop new protocols, methodologies, modalities, etc.
Okay. I really like how it's like you put your butt on the line, and this is what these are for, because not everybody's willing to do that. So that's why the government's
a backstop, and it's trying to help encourage you guys to keep doing what you're doing.
Yeah, the government wants us to be the most innovative country in the world, and I think these credits that's why there's been so much, as Charles was mentioning, bipartisan support for these. This is one of the few things that doesn't really get argued very much. Everyone believes that this is a net positive. And as such, we're anticipating and hoping for some good improvements now that there's been a change over the elections done. And we hope to see this continue and perhaps even be expanded.
Awesome. Dr. Aaron, you want to jump on, unmute yourself and ask your questions?
Yeah, so then do we just take our taxes and then you guys figure it all out? Because I'm a chiropractor.
So what we usually do is... Yeah, we'll send out a data request, and part of that would be your prior year tax returns. We would ask your tax accountant when they have, say, 2024 ready. We'll work with them. They'll send us that, and with that information, we calculate it, and then we go back and talk to your accountant, and we help figure out how much of this we're going to take, how much of some of the other things that possibly, if you talk with the rest of our team and you get into some of the other credits or the other tools, which of which you're going to use. And then as a team, we just augment your current tax accountant to make the right decisions, and then he's the one that files it. However, again, we said if it's an emergency or there's a problem with your current provider, we can help with that as well, but that's not what we're looking to do. I mean, we're looking to become just an augmented part of your team and help improve what you have, not rock the boat if that's not necessary. We certainly don't want to take that work on unless it's absolutely necessary.
And what about our past years of?
Oh, absolutely. Prior years. Then part of our onboarding situation, our onboarding protocols is we basically ask for your prior year. We need it for the tax returns anyway. Even if you're just doing 24, we need 3 years of tax returns because that's how this is calculated. You need inputs from prior years. So we'll get your prior year tax returns, or you can send them from your accountant or you personally, you can send those to us because that's going to be part of what we're going to ask for. And again, we can go back to 23, 22, and 21 and apply for this credit if the data and everything you have support that.
And to drill down deeper on that question, just to give you an idea of the process, you will turn over information and documentation to us. We will do a review and an analysis to familiarize ourselves with the company. Then some of this, obviously, no one's going to know your business better than you. So we will require some input and effort from you, providing us with information, documentation, et cetera, and we will coordinate with you to help you understand so we can explain in detail what type of things we need and help you along with us in that process. The first year is a very heavy lift and a big learning curve, but we will also help you understand how you want to look at this and approach this going forward. So certainly, you know, retroactively, we'll work with you through that entire process. And then on a going forward basis, we'll also give you, you know, tips and tricks and advice on how to make this process easier for you going forward.
Yeah. But I will say that we have tons of clients in this and tons of experience. So we know how to ask the right questions to you to basically save you a lot of time. And we know to go, and we only ask you for things we need. So this isn't something that's going to take you, you know, weeks and weeks and weeks to do. These are like, you know, phone call conversations and little sessions for us to go ask for things. And then a lot of people, if they're really straightforward, a lot of times you'll have some of this information about specific procedures that you're doing. And then there's other methods that we can do, like percentages and allocations and things like that. So there are methods to do this quickly or quicker than you would normally think. So it is going to take a lot more work the first year, but then after that, it's really on cruise control because we know kind of how your business works. And then we're going to advise you of how to kind of keep track of this and very, very easy ways for us to get this accomplished.
For things in the past, then how do you prove what I have done or haven't done?
Basically, it would be through allocations. And so what you would say, and one of the other things we do things like basically your percentage of revenue and things like that. So like if you had, or you can go back and really, you know, look at what you did in those prior years and give us good allocations. You know, because you're going to kind of know how this work is. You would need to go back and really think about, okay, well, how much of my staff time was based on these procedures that we deem to be R&D relevant or basically be able to apply for the R&D. So that's kind of what we really want you to focus on is that first what we do is we identify what treatments that do qualify, and then there's a process of us, you know, working with you to try to allocate the expenses for those years to those different treatments. You know, because it's going to be hard for the IRS to say, okay, you have a treatment that maybe was 10% of your revenue or very little part of your revenue, and you can't claim, okay, well, half of my staff's time on that. There are some situations there when later years, if this becomes a bigger thing where that would not raise any red flags, but you know, how this is going to work is, you know, or what's logical and how the IRS would look at this, you know, to limit your audit liability is you're going to want to try to tie the revenue or your time or your investment or other things to, you know, what you're actually claiming. So something can't be kind of out of whack. So we're really good at looking at ratios to make sure that this is, you know, you have really good audit support. So we do everything the right way.
Yeah. And I think to Charles's point, one of the important things is you are allowed to use reasonable estimates and attestation. We will always do our best to document everything. And then we will also be conservative on these things. There is no reason to try and push the envelope when there's clearly defined and easily recognizable rules and regulations that we could point to align your information with the code. And
I'll also say this, and Josh, I'll also jump in on that. We have a lot of experience. We work with a lot of clinics, so we can let you know if something looks, you know, we'll say, wow, that's going to look abnormal, or that's really, you know, are we really sure on that? Because that's not what we've seen. So that's one of the benefits of working with a firm like that is we really understand clinics and pain management and all of the kind of services that you guys are providing. And we file a lot of these and work with a lot of companies like this. So we understand what kind of is standard and what will look really odd. And look, sometimes odd is the truth. So if it is, we just have to be better at documenting that.
Yeah. You will have situations where maybe half of your staff time in the extreme was spent on, you know, 20% of revenues on a new protocol that's ramping up or something being offered as a loss leader to try and test. So it's not inconceivable, but like Charles is saying, there will be things we'll look to and we'll interact with you on that to ensure that we're providing, you know, accurate and reliable and defensible information on anything we file.
Did that answer your question, Dr. Elliott and Dr. Matt? I just want to make sure if you want to put a thumbs up or you want to jump on. I know we had a couple questions. I'll let you guys type that into the chats. And then also, you know, the big question is always like, how much is this going to cost me? How does it work? I love some of the fail safes that you guys have set up for the clients. If you wouldn't mind talking about that, how it works.
Yeah. So basically there's no upfront fee at all. So what we do is we'll estimate this out for you. Actually, there's no risk at all to begin with. So first we can have a conversation, talk about your situation, get information for us to do an estimate. And then, and at the end, if you don't like the estimate or fees or whatever, then you can walk away. There's absolutely no obligation. Once you agree to the engagement letter after we do the estimate, then you're obligated to use us. However, you're not obligated to pay us anything until you either use the credit against taxes. So if you had owed $100,000 in taxes and you had a $50,000 credit and you use the credit, then you're going to owe us fees for the $50,000 that you actually used because you had to write a lower check to the IRS. Or if you receive that back through an actual physical check, we wait till you get the check from the IRS, and then that's when you would owe fees. Or as you're using them against payroll taxes, if you're one of those companies that can qualify for that, that's when you pay. So there's literally going to be nothing out of pocket. And so there's no, you know, there's absolutely no risk for you to call and at least get a phone call or a meeting with us to discuss, you know, your situation. We can throw a lot of really great knowledge your way and a lot of options your way. And then if you want to go forward with the R&D, you have, you know, at that point, since we're going to be doing a lot of work and taking this all away and calculating it and help you file, then you're obligated once you do receive the use of it. So literally, it's not like you're going to have to write a check ever for this. Either you're writing a lower check to the IRS or you're getting the money from the IRS. So either way, it's, you know, win-win for you.
I would also add that, you know, unlike some firms, we've gotten the complaint back before that, you know, the firm billed them so much the juice wasn't worth the squeeze, and they really extracted all the value. So we have fee caps on those types of things. You're never going to see us run up the entire fees and expenses and billings. And then also, you know, as Charles was mentioning, one of the other big sticking points for a lot of clients is where the firm is expecting to be paid and you've received no cash flow. Well, we're doing this and we believe in this in our work such that we're going to allow you to take the time to go ahead and receive your payments and receive your benefit before we ask you to come out of pocket with anything.
And then one other question. Thank you guys so much. It's super helpful. Dr. Carey had a question about, does R&D pertain more to regen or is there a good R&D for chiro? And I think we had talked about that, like any type of equipment that you're using, soft wave, neuropathy treatment, things like that. If you're doing that in your chiropractic clinic, then yes, that would apply. If not, and it's just straight chiropractic, I don't think there's any R&D tax credits for specific.
Yeah, it's kind of an area where it has to be a new technique or a new, you know, part of chiropractic work that would apply. So it would have to be, you know, it's really what those areas are really kind of not we don't define as clearly covered. The other treatments that we had are really clearly covered. I mean, it's pretty, you know, settled.
Really what we want to look at is whether it's adaptation. So it can, like as Charles was saying, it can exist in chiropractic, but it's almost the same argument to give the analogy of dental, you know, which was a common one where people were pushing R&D and it really didn't necessarily apply. Maybe it did, but you know, changing something specific to the patient's protocol, making adjustment based upon dosage to the patient's, you know, weight, height, age, things like that, not necessarily. Developing a new protocol, adapting a protocol, doing testing on combinations of protocols, those types of things could apply even in something as chiropractic. Yeah. What you're not looking to do is get esoteric with interpretations here. Though the code isn't clearly defined with yeses and nos, you want to be able to clearly fit within those 4-part tests and ensure that you're doing things within the boundaries set by the code in Congress.
Awesome. Does anybody else have any questions? If you want to just unmute yourself and go ahead and ask before you finish wrapping up here.
I wanted to throw one more thing in. So we've talked about a medical focus, And while this can go into other areas of creating efficiencies, that can be with administration efficiencies. We have a very large pain group in Arizona, and they're working out a new training system that they're working with Salesforce. They've got huge money expended in trying to put this together. It's going to revolutionize how they do things. Charles, could you talk a little bit about something a little bit different like that?
Yeah, absolutely. So that's going to be one that, you know, that it's not, you know, going to hit you right off the bat that, wow, that qualifies for R&D. But there's actually a cutout in the rule for R&D for like system and software development internally that you're using for other for you in-house. So for you to develop your ERP or any other tracking software or things like that, we had somebody that came up with a clinic that came up for like a whole like weight loss treatment program with all these different things in it. And you wouldn't say, wow, lots of people are doing that. That still counts as R&D because he's throwing in a lot of different things. So a lot of your software that you're using, even if it's like your own, you have Salesforce or some of these other things that you're using to track some of the projects and stuff like that, that stuff can apply. So there's a lot of things that we'll ask you on the call that, our first call that may surprise you about what you can get. So thanks for bringing that up, Dale, because there is a lot of things that it's not just about treatments. It can be some of the other things that you're doing.
The best way I think I always describe it to clients is it's not just about research and experimentation and development of new widgets, but it's also the research, experimentation, and development of the assembly line to make the widget. So there's other things that will apply that might not immediately come to mind that we will kind of parse out through the discussions with you.
All right, very good. Any other questions? I think I want to thank everybody from the Origins group, all of you guys for making time today. Just want to make sure we answer any questions. If you haven't already, put your email in the chats. We'll get you over the PowerPoint presentation or the recording and then all the information. So if this is something of interest to you, please reach out to Dale Orr. His email is dorr@originsgroup.com and his phone number is 480-270-2713 if you guys don't see that. And you can always text us at the dojo. We're happy to help with any additional questions too. That number is 833-678-0800. But we do appreciate your time today, your questions. Is there anything else that anybody would like to ask or know before we end off today? Nope. Okay, good. Jeff, you did like a Wonder Woman conversion. Looking sharp, looking sharp.
I'm now presentable. Yes, thank you.
Yes.
That's what, well, I can polish up nice every once in a while.
There you go.
Yeah.
Charles, Dale, Joshua, thank you.
Thank you, guys.
Thank you for having us.
Great one. Have a
Great,
great
guys. Thanks,
Thank you.
everybody. Thanks, Josh. Thanks, Josh. Thanks, Dale.
Thanks.
Appreciate you guys.